I want to start today with just two emails, two pieces of text written by the same guy, but about 6 years apart.
Right.
And when you put them side by side, the contrast is,
Hmm.
it's actually kind of terrifying.
It's the perfect before and after. It really sets the stage for everything we're digging into today.
Okay, so let's rewind to 2010. Jeffrey Epstein is already a convicted sex offender. He's been out of jail for a bit, but he's, essentially radioactive.
Completely toxic.
And he gets this email from a contact asking for help, like getting a foot in the door at a big VC firm. And Epstein's reply is, honestly, it's just defeated. He writes, Silicon Valley is another world.
Which is basically code for, I can't help you. I'm a nobody there. All the doors are locked for me.
Exactly. He is on the outside looking in. Now, fast forward to 2016. Same guy, same inbox, but the tone, completely different.
Yeah.
He's sending an email basically boasting about his network, and he types the actual words. I have many friends in Silicon Valley.
And the craziest part is, he wasn't lying.
He really wasn't. And that is the core of this deep dive. We are unpacking this massive cache of documents from the Justice Department, emails, schedules, investment records that map out exactly how he pulled that off.
How do you go from radioactive in 2010 to, trading emails with the founders of Google, LinkedIn, and Microsoft just a few years later? It's a playbook.
And beyond just the social climbing, I really want to get to the bottom of the money. Because you have this lingering myth of Epstein as some kind of financial savant.
The master of the universe.
Yeah.
The guy who could see markets nobody else could.
Right. But the reality in these papers is so much messier. We're going to see some admittedly huge wins, sure.
Oh, absolutely. Some massive wins.
But we're also going to see these embarrassing flops, terrible advice from very famous people, and a lot of, desperate maneuvering to keep his name off the paperwork.
It's less master of the universe and much more master of the loophole.
Yes. Perfect. But let's start with the access. How did he get in? Because you don't just walk into Silicon Valley after a conviction like his and get a seat at the table.
Yeah.
You need a strategy.
You need what some sociologists call reputation laundering. And looking at the timeline in these files, his main washing machine was the dinner party circuit.
Specifically, the events hosted by John Brockman and the Edge Foundation.
Exactly.
And for anyone who wasn't tracking the tech scene back then, the Edge wasn't just some dinner club. This was the intellectual Olympics.
It really was. If you were at a Brockman dinner, you were sitting next to Nobel laureates, theoretical physicists, the founders of the biggest tech companies on the planet.
It was a stamp of approval.
It was. And Epstein realized that if he could just physically get into that room, suddenly the sex offender label gets a little bit smaller. I mean, if you're photographed eating salmon next to the founder of Google.
You are, by definition, part of the club. He used proximity as a disinfectant.
Precisely. And once he was in that room, he wasn't just mingling. He latched onto specific nodes in the network. And the biggest node, the name that just keeps popping up in these files, is Peter Thiel.
This is, I think, the most significant relationship in the entire cache of documents. Peter Thiel.
Founder of PayPal, first investor in Facebook, the ultimate Silicon Valley power broker. The files show they met for lunch at least 8 times between 2014 and 2017.
8 times. That is not a casual bump into you at a conference thing.
I know, that's a relationship.
And Epstein was clearly trying to escalate it. I saw that email from 2014 where he invites Thiel to his private island.
Oh, yeah.
He says, I'm always free to do as I please. Would you prefer to visit the island, or can we meet in New York?
Such a classic power move, right? Emphasizing his total freedom. Now, we have to be really precise here. Thiel's spokesman has stated on the record that he never went to the island.
Right.
But the invitation itself shows the level of familiarity Epstein thought he had earned. And here's the tactic. Epstein used the fact that he knew Thiel to unlock other doors.
It's the domino effect.
Yeah.
I just had lunch with Peter becomes the password to get a meeting with, say, Noam Chomsky or Woody Allen or a former Israeli prime minister.
Exactly. He was trading on the social capital of one powerful person to legitimize himself to the next. It's a total confidence game.
So, okay, the strategy worked. He got the access, he got the meetings, but let's talk about the actual investing. Because at some point, the schmoozing has to stop and the checkbook has to open. Did he actually know what he was doing in tech?
Well, this is where it gets really surprising. He had some incredible wins, just massive. And ironically, His biggest home run came directly from that Thiel connection.
Okay.
In 2015 and 2016, Epstein committed $40 million to a fund called Velar Ventures.
Which is a Thiel-backed fund.
Co-founded by him, yeah. And Velar is interesting because they weren't looking at Silicon Valley. They were looking at startups in Europe and elsewhere. Companies like Wise, the money transfer service, or Conato, a French neobank.
So he puts in $40 million. What's that worth today?
According to the analysis of the estate and the fund's performance, by last year, that stake had grown to roughly $170 million.
Wow. That is a lot of zeros.
It's a massive windfall for his estate. So it suggests that, at least in this case, piggybacking on Thiel's deal flow was, well, a genius move. And it wasn't his only one. The files also show he went heavy into crypto way before it was mainstream.
I saw the Coinbase numbers.
Yeah, this is way back in 2014. Coinbase was a tiny company valued at maybe $400 million. Epstein put in $3 million.
Which, I mean, considering Coinbase is a household name now, was an absolute steal.
A total steal. He sold half that stake in 2018 for $15 million. So he turned $1.5 million into $15 million in 4 years. That's a 10x return.
And what if he had held on to the rest?
If his estate held the other half until the 2021 IPO, it would have been worth another $30 million.
So he clearly had an eye for where the wind was blowing with crypto, or at least he surrounded himself with people who did.
The documents seem to point to a connection with Brock Pierce for the crypto side of things.
The former child actor turned crypto evangelist.
That's the one. They met back in 2011.
There was an email from Brock Pierce in those files that really, it just stuck with me. It felt so gritty.
You're thinking of the December 2018 email.
Yeah.
Pierce invites Epstein to Antigua, and he explicitly mentions, quote, a boat full of the best of Ukraine.
Yeah. That line, it's just this stark reminder that while we're sitting here talking about venture capital and ROI, the underlying darkness of Epstein's world never, ever went away.
It was always there. The business was just another venue for the exact same predatory lifestyle.
So, okay, he crushed it with Velar. He crushed it with Coinbase. If you stop looking right there, you'd think, okay, this guy was a financial genius.
Right, but the sources who actually worked with him say the complete opposite. They told the investigators, and I'm quoting here, he wasn't very good at investing in technology.
That's the consensus from the insiders.
Totally. He threw money around, but he often backed the wrong horse or just got wiped out. The biggest disaster in the files has to be Jawbone.
Oh, man, Jawbone. I remember them. The little junky bracelets that tracked your steps, they were everywhere for like 6 months in 2012.
And Epstein was a major investor.
Yeah.
He poured $10 million into that company.
And Jawbone went famously bankrupt in 2017.
Total zero. He lost every single cent. And this is where we get a really interesting psychological insight.
Okay.
There's this furious email exchange in 2018 between Epstein and the Jawbone CEO, Hossein Rahman. Epstein is demanding a settlement, trying to claw back some of his money. And he writes this really bizarre sentence. He says, if I had a current net worth of over $100 million, I would certainly use my resources to recover the money.
Wait, hold on. If I had a net worth of over $100 million.
Yes.
This is a guy who flies private jets, owns an island, a mansion in Manhattan.
Yeah.
And he's implying he doesn't have $100 million liquid.
It just completely pierces the veil. It suggests that the billionaire status was incredibly fragile, or at least all tied up in assets he couldn't touch.
For a master of the universe to admit that in an email, that is shocking.
It sounds like he was cash poor and asset rich. But the losses weren't just about backing bad companies. Sometimes the smart money gave him just terrible advice. And we have to go back to Peter Thiel here.
This is my favorite part of the files.
Yeah.
Because it just shows that nobody really knows anything.
It's incredible. So in 2014, Epstein had the chance to buy $100 million worth of Spotify shares. The valuation was $5 billion.
$5 billion for Spotify. I mean, knowing what we know now, you mortgage the house to take that deal. You do whatever it takes.
You do whatever it takes. It went public at $27 billion. It would have been a massive multiplier. But Epstein asked Thiel for advice.
Yeah, no.
And Thiel, the contrarian, the genius, told him, don't do it.
Ouch.
It gets worse.
Ouch.
Thiel also advised Epstein not to invest in Palantir.
Thiel's own company.
His own company. He told Epstein the price was below market value, which you'd think is a signaled buy, but in this context, he framed it like it was a bad deal.
Or maybe he just didn't want Epstein on his cap table.
That's probably it. Either way, Palantir peaked at nearly $500 billion. Epstein missed the entire ride.
So he missed Spotify, he missed Palantir. I also saw Zalando on the list of misses.
Yes, Zalando, the huge European fashion company. He passed on an early investment in 2011. They went public 3 years later at almost $7 billion.
And SpaceX. Don't tell me he passed on SpaceX.
He had multiple chances to buy secondary shares of SpaceX in 2017. The valuation was $22 billion then.
Which seemed high at the time, maybe.
Maybe. But today, it's over $1 trillion. He passed.
It completely dismantles the Oracle reputation. It seems like for every one Coinbase he hit, he missed 3 SpaceXs.
It really proves that having the phone number isn't the same thing as having the foresight. He was in the room, but he wasn't always making the right calls.
I want to pivot to something that feels a bit more sinister than just losing money. It's the mechanics of how these deals were structured. Because as time went on, his name became a real problem.
The ick factor.
The ick factor. People wanted his money, they were desperate for the capital, but they were terrified of the PR nightmare if anyone found out.
And there's this one exchange with Jeremy Rubin, a crypto founder, about a company called Layer 1.
This email is crucial.
Rubin writes to Epstein in 2018, and he's very blunt. He says, and I'm quoting, "I'm concerned that otherwise, potential investors who Google his name might get scared."
Google his name might get scared. That is the most polite way of saying, if they see a convicted sex offender is our co-investor, they are going to run for the hills.
So they start strategizing. The emails literally show them trying to figure out how to include Epstein in the due diligence without actually putting his name on the documents.
It just shows that for so many people in this circle, the crime itself was not the deal breaker.
The publicity of the crime was the deal breaker.
They were fine with the money, just not the reputation that came with it. And speaking of hiding inside complex structures, we have to talk about the whiteboard moment. This involves George Osborne, the former UK Chancellor.
This is one of those scenes you can picture it. George Osborne, a former high-ranking British politician, is in a room with Jeffrey Epstein. Osborne is pitching a new fund called Sophia,
which translates to pleasure and wisdom, which, I mean, knowing Epstein, that feels a little on the nose.
Very on the nose. Now, Osborne's team insists Epstein never invested, but the emails show Epstein was not just a passive listener. Osborne writes to him in 2012, praising him for sketching out a corporate structure on a whiteboard. He calls it a perfect iteration.
And what was that structure he drew?
It was effectively the blueprint for a special purpose acquisition company. This was years before SPACs became this trendy thing on Wall Street.
Right.
And Sophia eventually used that exact structure to take Virgin Galactic public.
So you're telling me a convicted sex offender is standing at a whiteboard, literally architecting the future of financial markets, while a top British politician takes notes.
It's chilling. It shows he was intellectually engaged in the plumbing of the financial system. He understood the loopholes better than the people running the government.
He also tried to use that intellect to sort of buy his way into science. We know he was obsessed with transhumanism, AI, living forever.
He was chasing immortality. In 2012, he emails Elon Musk asking for an intro to the AI guy in London.
That would be Demis Hassabis, the founder of DeepMind.
The very same. And then there's the story of Joshua Bach, a German AI researcher. This one is particularly sad.
Okay.
The files show Epstein was covering Bach's living expenses for years, from 2013 all the way to 2019.
So he was basically acting as a patron of the sciences.
In the most transactional way you can imagine. Bach later admitted to Forbes that his own funds were just depleted. He said he had strong disagreements with Epstein's value system, but he took the money because he needed it to survive and keep doing his work.
That's the leverage. He finds brilliant people who are cash poor, and he buys them. It's predatory philanthropy.
He collects people like he collects stocks, but just like with the stocks, the market eventually turned on him.
Which brings us to 2019, the final months before his arrest. What did the emails look like when the walls are closing in?
Desperate. You can just feel the energy shift. He's flailing. In January 2019, he's blasting emails to Peter Thiel about AO rejuvenation, plant biology, quantum computing, just throwing buzzwords at the wall, trying to get a meeting.
Is Thiel writing back at this point?
It doesn't look like it. And then there's this one just pitiful email where Epstein asks Thiel point blank,
what?
Did it fizzle out?
Did it fizzle out? Wow.
He knew. He could feel the network pulling away. The many friends in Silicon Valley were finally ghosting him. The utility of his money had been outweighed by the toxicity of his reputation.
Yeah.
Last.
That is a very heavy place to land. So let's pull back and look at the whole picture here. We've seen the access, the lucky wins, the disastrous losses, and the eventual ghosting. What's the takeaway?
The summary is that Epstein successfully hacked Silicon Valley. He leveraged dinners and introductions to penetrate the absolute highest levels of tech. But as an investor, he was a mixed bag. He had huge wins like Coinbase, but he missed the trillion-dollar opportunities like SpaceX because of bad instincts or, bad advice.
He wasn't a genius. He was just present.
Exactly.
And for you listening,
Yeah.
why does this matter? Aside from the true crime fascination of it all.
It matters because it exposes the amoral nature of capital in these high-growth sectors. We like to think of tech as this meritocracy where the best ideas win. But these files show that due diligence, the process that's supposed to keep bad actors out, was basically non-existent.
The smart money just ignored a man's criminal record because his check cleared.
It really forces you to look at the current landscape differently.
It does.
And here's the provocative thought I want to leave you with. The files are just full of people claiming they didn't know or that they disagreed with his values while simultaneously cashing his checks.
It raises a really uncomfortable question for everyone in the industry today. Is the vetting process actually any better now?
Or is there someone else right now with a radioactive past sitting in a boardroom in Palo Alto simply because they wrote a check with enough commas in it?
Because if these files teach us anything, it's that in that world, capital doesn't just buy silence.
It buys forgiveness. That's it for this deep dive. Thanks for listening.
Thanks for having me.